How do you pick between two different markets? Let's suppose you're looking at two syndications. They're both multifamilies. You're happy with both operators. The numbers are all similar, but they're in different cities. How do you choose? So we've already talked about the 9 factors you can use to vet a location, but now you have to apply that information. What do you do? So the first step in choosing between markets is to realize that you may not have to choose between markets. It depends what you're trying to accomplish. If this is the only syndication you're going to do all year, yes, you'll have to make a decision. But if you are adding to your portfolio or building a portfolio, you don't necessarily have to choose between 2 areas or 3 areas. You can do both. But let's just say, for argument's sake, you need to choose between city A and city B. You've gone through the 9 factors we look at when you analyze a market already. So you've looked at the job market, you've looked at the diversity of the job market and the economy, population change, housing supply, the price to rent ratio, landlord laws, taxes, and crime. And you have these 2 different cities. How are we going to decide? What I would suggest is that you decide what you're looking to add to your portfolio. Do you want cash flow or do you want appreciation? Of course, you'd like to have both, right? But let's suppose you're focusing on one or the other, cash flow or appreciation. Now, one thing I will say, as a general rule in real estate, you'll make more money with appreciation than you will ever make in cash flow. But you have to have enough cash flow to hang on long enough to get the appreciation. So it's a balance. Let's pretend you're a cash flow investor. You want to cut back at work, you want to retire, whatever it may be, you want cash and you want it now. If you're looking at a city that's very hot, meaning there's a lot of development, there's a lot of new construction, things are growing quickly, that's often not the best cash flow. Why? Because the prices have probably gone up. There are likely other investors moving into that area. It doesn't mean you won't make money, but it might not be the best place for cash flow. Cities that cash flow more heavily tend to be boring, unsexy. Places like Indianapolis cash flow very well, or Memphis, or Huntsville. They may not necessarily be the best for appreciation, but sometimes they are. All right, let's suppose you're not a cash flow investor. You're looking down the road. You are thinking about retirement in 10, 20, 30 years. So you really care about appreciation. So now how do you choose between city A and city B? Well, you do still want something to cash flow so that you can hang on to that asset without being in danger. You're more interested now in growth. You're investing in the sexier cities, right? The ones that are on the news that you hear about, the ones that have higher rates of population growth, more job creation. That's probably what you're going to focus on. All right. It's never that simple, right? So suppose you are looking for appreciation. You know that, and you still don't know what to do. The cities look the same. How do you pick between 2 very similar areas? I would say if you really can't see a significant difference between the 2 areas and you truly can't decide, they're probably both fine. And again, you don't need to make a choice because either one of them is going to likely perform very similarly to the other city. So at that point, you need to be looking at things like the syndicator or the asset itself to make your choice. And remember, over time, you're building a portfolio. You're likely not going to be invested in just one area. Very few people do that because they're looking for diversification. So if you truly find that you can't choose between 2 cities after going through all these factors, after talking to the sponsors, you probably have 2 really good choices. So I wouldn't stress so much about choosing the best one. Rather, you should focus on choosing one that is good enough to meet the goals in your portfolio.